So what we have next then is the variety of loss reliefs that we could have. So the different ways we could claim this loss. And we can see here that they're listed in sections. Now, don't worry about learning these section numbers, okay? So you don't need to memorize all these sections. You just really need to know what the basics mean. And the only one we are focusing on for your exam is the carry forward. So you can forget about these two here. So they're in the notes. You might want to refer back to them as a later date, but you just need to know, what do I do with the loss if I decide to carry it forward? What does that mean? So as we've already said, if you make a loss, then the assessment is nil. So the main thing to recognise is you don't automatically get some money back. What you then have to do is decide what type of claim you're going to make. And the assumption that we are going to make for this recording is that you will only be in a position where you'll be asked to carry the loss forward. So what does that mean then when you carry the loss forward? So it says the loss can be carried forward against future total profits before QCD. All right, now a QCD, we saw that in chapter 16. QCD is a qualifying charitable donation. So you're allowed to offset the loss against total profits before the gift aid. So for example, if you've got some trade profits the following year, and you might have, say, some property income, and maybe you've got some interest as well, you would add all those together, see what you've got, and it's at that point you'd use the loss that you've brought forward. You claim it there. So it's before we deduct that QCD. All right, this has to be done prior to the QCD. It's a bit like, I suppose, individuals when they have loss relief, they do it before the personal allowance. And when we do loss relief for capital gains, we've got the annual exemption to consider. The main thing to appreciate here is that you can use your trading losses against your total profits, as it says here. It's not just restricted against trading profits. But what often happens is that if you carry the full amount of the loss forward, then you might end up wasting these qualifying charitable donations. So this is where, say, you've got a gift aid payment. If you remember in chapter 16, that gift aid payment can reduce your profits so that you've got a smaller taxable profit. All right, so we want to avoid wasting these, don't we? If we are going to get relief for those anyway, we don't want to waste that loss brought forward by taking it off and then not utilising these. So think about your capital losses. When we carried those forward, we always considered, didn't we, that annual exemption first. We didn't want to waste the loss that we brought forward. So as it says here, you use it against future total profit before the qualifying charitable donation. It is possible to specify the amount of loss to relieve to avoid the wasting of the QCD. You can carry it forward indefinitely. So you don't have a limit, you know, of, say, I've got to get rid of it in 4 years or something. There is no need to make a claim under section 37. Don't worry about that. It's just referring to this section 37. So you don't have to do these first. You can actually say, I want to carry all my loss forward. You must make the claim within 2 years, and it applies to anything after the 1st of April 17. But you're always going to have you know, exam questions that are in the current year of 1920, so I wouldn't even worry about that last bullet point.